Markets are entering the North American session on a steadier footing after a strong risk rally that has pushed U.S. equities to fresh record highs. Investors are now consolidating those gains as they monitor ongoing developments in U.S.-Iran negotiations. Early week optimism, partly fueled by upbeat rhetoric from President Trump, helped lift sentiment and weigh on the dollar. However, the lack of concrete progress on major sticking points, including Iran's nuclear program, its highly enriched uranium stockpile, and the reopening of the Strait of Hormuz, continues to temper follow-through. Markets remain highly sensitive to geopolitical headlines, especially with the U.S. naval blockade of Iranian ports still in effect. In FX, the dollar is stabilizing after its recent pullback, with euro-dollar edging back below 118 and broader price action relatively contained. The Japanese yen remains in focus, with dollar-yen rebounding modestly after earlier pressure from renewed verbal warnings by Japan's Finance Minister Katayama, who reiterated authorities' close monitoring of FX volatility linked to oil-driven swings and confirmed intensified communication with the U.S. on exchange rates. Moves across other G10 currencies are more muted, reflecting a pause in directional conviction. Across regions, Australia's labour market data showed steady conditions, reinforcing expectations the RBA will stay attentive to inflation risks. In China, stronger headline GDP has been offset by softer underlying activity, highlighting a fragile recovery. In Europe, ECB officials continue to signal a patient, data-dependent stance as they assess the inflationary implications of geopolitical developments. The March monetary policy accounts are due to be released at the time of this update. They are widely expected to highlight the Middle East conflict as a key source of upside risk to inflation via energy prices and downside risk to growth, while reinforcing the need for full optionality and a meeting-by-meeting approach. UK fundamentals, meanwhile, remain tied to upcoming growth in industrial data. More broadly, the risk tone is steady but lacks fresh momentum, with US equity futures pausing after a recent surge. S&P 500 futures are relatively flat, while NASDAQ futures trade marginally higher. Oil prices remain relatively contained despite persistent Middle East supply risks from the ongoing blockade and uncertain ceasefire dynamics, suggesting markets are cautiously optimistic but still awaiting clear direction. Looking ahead to the North American session, attention shifts to a busy calendar, including U.S. initial jobless claims, the Philly Fed survey, and industrial production. A slate of Fed and ECB speakers will also be closely watched for signals on the policy outlook as markets balance resilient growth against easing inflation pressures and lingering geopolitical uncertainty. That's all for now.